Stocks in a company that pay monthly cash dividends to its owners are known as dividend stocks. These distributions typically take the form of cash payments. However, the greatest dividend stocks can also be good methods to expand your wealth over the long run. Dividend stocks can be valuable sources of income, but the finest dividend stocks can also be wonderful ways to increase your wealth. Here are dividend stocks that will make you rich. Lowe's. The stock of the home improvement company might not appear to have a lot of appeal at first glance. That is correct unless you place a premium on dividend growth. Since it went public in 1961, the company has increased its dividend payment annually, and over the course of the last decade alone, it has increased the payout by a staggering 556%. Investors who are concerned about the housing market decline that started in the second half of 2022 should not be concerned. When there is a shortage of homes on the market and it is more difficult to acquire one, homeowners are more likely to make improvements to the one they already own. Another significant factor that works in Lowe's favor is the average age of a home in the United States, which ranges from 31 to 60 years old, depending on the state. Lowe's will see a significant increase in revenue as a result of the next generation of do-it-yourselfers. Walgreens Boots Alliance. Walgreens, which is currently reaping the benefits of its efforts to turn around its business, is one of the largest operators of retail pharmacies anywhere in the world. The company was able to cut its cost by billions of dollars, and it is now beginning to see the results of its efforts to become a more integrated provider of healthcare services. When everything is taken into account, there is the potential for a currently profitable company to become even more prosperous in the future. The administration has elevated the company's long-term objective for the expansion of their healthcare business in the United States. Walgreens stock has a lot to offer dividend investors and value investors due to the fact that its dividend yield is well above 4.5%, and that it has increased its yearly payout for the past 47 years in a row. This demonstrates that Walgreens is a company that is committed to its shareholders and recognizes the importance of rewarding them for their loyalty. Realty Income. This stock could be the ideal choice for you if you are seeking an easy approach to invest in high-quality real estate for the sake of both income and growth. The corporation holds a diverse portfolio of buildings, the majority of which are unaffected by e-commerce. These assets generate healthy cash flows as a result of tenants who sign long-term leases. Realty Income is also recognized as a dividend aristocrat due to the company's 27 years of uninterrupted dividend growth and 53 years of continuously paying a dividend each and every month. Johnson & Johnson. Johnson & Johnson controls a portfolio of high-quality brands that produce essential goods for consumers, particularly in the medical and pharmaceutical industries. In addition to the well-known consumer brands that it produces, Johnson & Johnson also has vast and consistently lucrative businesses in the pharmaceutical and medical device industries. The merger has made it possible for the corporation to maintain its streak of consecutive dividend increases for 60 years. This unrivaled diversification across consumer health products, medicines, and medical devices has proven to be a major revenue generator over the course of the company's history. However, management believes that this conglomerate structure has hindered the company's capacity to focus its resources. As a result, plans to separate the consumer products division into a distinct company that was revealed in late 2021. The split is expected to take place in 2023, at which time existing owners will be given shares in each of the resulting firms. Target. Target has consistently shown greater profitability than its competitors over the course of many years by achieving some of the greatest gross margins and operating margins in the retail industry. In the meantime, the company has been concentrating on extending its in-store offerings and building its e-commerce operation, both of which have contributed to the company's continued strong sales growth. However, 2022 was a difficult year for investors in Target due to the fact that very high expectations collided with the difficult reality of the retail industry, which resulted in the share price of the stalwart company falling by more than 36% up to early December. Despite having a difficult year, Target continues to be one of the most efficiently operated retail companies and a consistently successful business. Investors in dividends should put Target on their shopping list because the company's dividend has increased annually for the past 50 years and is still growing, and the company's stock is currently trading at a significant discount to its all-time highs. Brookfield Infrastructure. There are times when the most profitable investments are those that are not readily apparent. This is the situation with Brookfield Infrastructure, which is a global owner of water, energy, utility, transportation, and communications infrastructure. Its assets generate consistent cash flows that are resistant to both recession and inflation, and Brookfield returns a sizable amount of those cash flows to shareholders. Brookfield Infrastructure is a hidden dividend jewel that has provided almost 900% in total gains since it went public in 2008. With a dividend yield that is close to 3.5% at recent prices and a commitment to boost the payment 5% to 9% every year, the company has delivered almost 900% in total returns. Microsoft. Microsoft, which is one of the largest corporations in the world, has consistently raised its sales, and the fact that it has a strong emphasis on recurring revenue sources, such as subscription-based revenue, is an especially appealing characteristic for dividend investors. The firm's financial sheet is strong, indicating that it has more cash than debt, and its payout ratio is quite low, indicating that there is a lot of potential for the dividend to be increased. It would not be a surprise if Microsoft became a dividend aristocrat, because the company has increased its dividend payment for the past 12 consecutive years. Although it has a low yield of 1.1% and the year 2022 has been a challenging one for the stock, it has a fantastic track record of outperforming the market in terms of total returns over the long term. American Express. It is one of the best dividend stocks available, and financial services in general, including consumer and corporate lending, are another area in which you may discover a couple of top dividend stocks. Despite the fact that it is not a dividend aristocrat, American Express has a track record of either increasing or sustaining its dividend throughout the course of several decades, regardless of the economic climate. This is a testament to the high-quality lending standards it maintains, as well as the fact that it targets consumers with higher incomes, who are statistically less likely to fail on their loans when the economy is in a downturn. Because of this, American Express is a very attractive investment opportunity for anyone who is interested in owning a leading financial services company, but is also concerned about the state of the economy. This is an excellent investment to purchase when broad market conditions are bearish, and keep for the eventual comeback of bull market conditions. Clearway Energy Company. Although the majority of people consider renewable energy to be a destination for growth investors, there is also a wonderful potential for income investors in this field as well. Clearway Energy, which owns and operates wind and solar assets on a utility scale, serves as an outstanding demonstration of this concept. The company first invests in, then purchases and operates renewable energy plants, and finally sells the power generated to utility companies under long-term contracts after having done all of these things. These contracts cover not only a few years, but several decades as well. Over the course of the preceding couple of years, the dividend yield has been continuously higher than 4.5%, and the payout has increased by an astonishing 84% since 2019. If you are looking for a more secure and less volatile way to benefit from renewable energy sources like solar and wind, Clearway Energy is an excellent choice to explore as an option to look into. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.